Hello viewers, welcome to my channel. I'm Hasham. So already I have completed 4 problems on computation of income from business. Hope you are following the previous videos and got a good command on the subject of income tax 1. So all these videos are interlinked. If you join in between, you may not be able to understand fully. So my suggestion to the regular genuine viewers to watch the earlier videos. First video is very important on this profits and gains of business and profession. On introduction I have given. So complete provisions I have explained. Then I have already solved some 4 problems on this computation. So watch the earlier videos, then only you can be able to understand this. So if you have not watched, I suggest you to go to the playlist of my channel. Select the subject Income Tax 1 for the assessment year 2021 and watch the video on profits and gains on business on profession. Then we'll continue the next problem. Before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So without problems, you cannot be able to understand the solution explanation. So my suggestion, keep it ready. Now next problem, compute income from business. Fifth problem, problem number 5. Compute income from business of Shanti from the following information. So some profit and loss account is given in the problem. Net profit is given 1,55,000. So we begin our computation by taking net profit 1,55,000. Now some adjustments are given. Actual bad debts 2,000. Depreciation allowed 5,000. General expenses include domestic expense of proprietor 12,000. These 3 adjustments are given. Now first of all, we'll begin with our solution. Computation of income from business of Shanti for the assessment year. Net profit as per P&L account 1,55,000 given in the problem. 1,55,000. Now we add inadmissible expenses. The expenses which are already debited to profit and loss account but Income Tax Act does not allow. That expense are called inadmissible. Now one by one we'll see. Salaries paid, that is allowed. Salaries paid to employees, allowed. General expenses 60,000, allowed. But one adjustment is given regarding general expense. General expense include domestic expense of proprietor. There are some domestic expense of the proprietor and that is included in general expense. Income Tax Act says no. Any expenses, personal expenses of proprietor cannot be debited to profit and loss account. But here it is debited. So that 12,000 rupees will be disallowed. So here inadmissible expense, general expenses, domestic expense of proprietor 12,000 disallowed. Next comes RBD, reserve for bad debts. The full form of RBD is reserve for bad debts, disallowed. The provision for bad debts or reserve for bad debts are disallowed. Actual bad debts will be allowed. Here in the problem, in adjustment it is given actual bad debts 2,000 rupees. This actual bad debts 2,000 is not debited to P&L account, but it is given in adjustment. So Income Tax Act says actual bad debts will be allowed as deduction. So lastly, we'll take deductions as per IT rules. In that we deduct the bad debts. But RBD completely disallowed. Reserve for bad debts disallowed. Next comes donations. Previous problem also I told you any form of donations given will not be allowed by Income Tax Act, disallowed. Then next comes IT reserve, income tax reserve, provision for income tax or reserve for income tax disallowed or income tax paid. If income tax paid is given, provision for tax is given or reserve for income tax is given, it is disallowed. Next comes sales tax, it is allowed. Sales tax, GST, entry tax, it will be allowed. Then depreciation. Depreciation, if it is debited in the profit and loss account, we have to see the adjustment. In adjustment, it is given depreciation allowed 5,000. So according to IT rules, depreciation allowed 5,000. Here in P&L account, depreciation is debited 12,000, disallowed. Whatever is debited in P&L account will disallow. And adjustment depreciation is given, that will be allowed later. So right now depreciation 12,000 disallowed. Next comes to drawings. It is not an expenditure, disallowed. Then next comes interest on capital. It is not an expenditure, it's a notional expenditure. Disallowed. Over all the debit side items we have seen, we have inadmissible items we have added back. So take the total of inadmissible expenses, it comes to 92,000. If you take all the total, 92,000. Now add up 1,55,000 plus 92, 2,47,000. From this we deduct those incomes which are credited in profit and loss account, but those incomes are not business incomes. It may be other income which is taxable under other heads, but it is not business income. We deduct. Credit side, by gross profit, it's a business income. Rent from house property, it is taxable under income from house property. It is not a business income, so we deduct. Incomes taxable separately. Rent from house property 50,000, deduct. Second, discount. Discount is a business income. Then bank interest. Bank interest is taxable under income from other sources. It is not taxable under business income. Already it is credited, so we deduct. We remove it. Bank interest 15,000. Then lastly, dividend. Dividend is fully exempted from tax. Any dividend received from Indian companies are fully exempted from tax, not taxable. Deduct. So these three are the incomes which are credited in P&L account, but Income Tax Act says these are not business incomes, so we deduct. The total of the three is 90,000. Subtract 90,000. Subtract 90,000 will get 1,57,000. Now deductions as per IT rules. Some deductions are allowed, but it is not debited to profit and loss account. Income Tax Act has given the deduction, but it is not debited. So which are the deductions? In adjustment it is given actual bad debts. Actual bad debts 2,000, that will be allowed as deduction. Similarly, depreciation allowed as per IT rules 5,000. Total 7,000. Subtract 7,000, 1,50,000. That's it. This is the end of problem number 5. Notes I have not given here. In the earlier problems, every problem I have given the note. But here you should write yourself. Like actual bad debts are allowed as deduction, whereas reserve for bad debts are not allowed. Similarly, general expenses includes domestic domestic expenses, that is not business expenditure, disallowed. Similarly, working note, one more working note you can write, rent from house property is not a business income. It is taxable under income from house property. That's why we deducted. Bank interest is taxable under income from other sources. Dividend received is not taxable at all. All these things you can write in working notes. Debit side you can see donations. Donations, income tax, reserve are not allowed as deduction, whereas sales tax are allowed. Then depreciation we have disallowed, later on separately we have allowed. Drawings and interest on capital specifically disallowed. That's it. These are the notes you can write yourself. Now, sixth problem. See the problem number 6. Mr. Mahendra is a proprietor of a business. His profit and loss account for the year ended 31st March 2020 is as follows. So a big profit and loss account is given. Last one, net profit is 3,04,510. 3,04,510. This is the net profit. So we begin our calculations from net profit. Computation of income from business of Mr. Mahendra for the assessment year 2021. Net profit as per P&L account 3,04,510. Now, first of all, we'll begin with working notes. First of all, we'll see the adjustment. Adjustment we'll discuss first. Later on, we'll come to P&L account. Adjustment. Mr. Suresh is a trader. Mr. Suresh, actually the business is of Mr. Mahendra. We are computing the income from business of Mr. Mahendra. In his business, there is a debtor, Mr. Suresh. Mr. Suresh is a trade debtor for 6,500 for the last 2 years, and it is decided to write off as bad debts. But income tax officer is objecting it. See here, Mr. Mahendra says to the income tax officer that we are having a debtor, Mr. Suresh, an amount is due from him for rupees 6,500 for the last 2 years, and we are unable to recover the amount. Then Income Tax Act says if the assessee satisfies some conditions, then bad debts are allowed as deduction. So here, assuming that Mr. Mahendra is satisfying the condition, so he should be allowed a deduction. Income tax officer does not have any discretionary power to disallow any bad debts. No, when the SSC is satisfying the condition, he will get the deduction. So income tax officer cannot object it. If the SSC satisfies all the condition, it is a deduction allowed. So this 6,500 rupees deduction allowed as per IT rules. Second, amount of income tax actually paid during the year. Ignore, we don't require. Income tax paid will not be considered while calculating income from business. Depreciation allowable as per IT rules. So this depreciation will be given deduction, and depreciation which is debited to profit and loss account will be disallowed, add back. Advertising expenses include 5,000 rupees spent on special advertising campaign to expand the business in the new market. Income Tax Act says advertising expenditure will be allowed, whether it is spent in old market or new market, doesn't matter. It is simply advertising expenditure, so it is allowed. Whether it is advertisement is done in old market or new market, doesn't matter. Sri Mahendra carries on his business from rented premises. Some premises they have taken on rent. In these rented premises, they are running the business. Half of which is used as his residence. That premises which is rented, half of the premises is used for residence, and the remaining half business is run. Rent rates and taxes include 24,000 paid as rent of the premises during the year. Actually, rent rates and taxes, all these three are combined. In this, rent of premises is 24,000. Actually, the complete premises is not used for the business. Half of the premises is used for business, and remaining half of the premises is used as residence. The rent of residence will be disallowed. Rent of residence of the owner is disallowed, not business expenditure. So 24,000 half, 12,000. The 12,000 rent rates and taxes will be disallowed relating to residence premises of the owner. During the year, a cash purchase of goods for rupees 42,000 is settled through credit card. 42,000 rupees cash purchases. It's a revenue expenditure. Paid more than 10,000, but paid through credit card. Any amount paid over 10,000 rupees should be paid in account to pay check or bank draft or any electronic mode, just like debit card or credit card. So Income Tax Act says if the revenue expenditure is paid through credit card or debit card, it is allowed as deduction. So in working note, we'll write down amount paid for cash purchases 42,000 rupees through credit card is allowed as deduction. Compute the business income of Mr. Mahendra for the current assessment year. Adjustment I have explained. Now I am coming to the problem. Debit side. Already net profit we have taken 3,04,510. Now debit side, which are the inadmissible expenses. One by one I'll discuss. Establishment expenses allowed as deduction. It's a business expenditure. Rent rates and taxes. Just now I told in adjustment it is given the premises is rented, half of the premises used for residence and half premises used for business. So half of the rent will be disallowed. Rent rates and taxes 24,000 half, 12,000 will be disallowed. Next, general charges allowed. Repairs and renewals allowed. Loss on sale of land, land used for business purpose. Loss on sale of land, land was sold, there is a loss. It's a capital loss. So loss on sale of asset is a capital loss. Income Tax Act says only revenue loss will be allowed, capital loss will not be allowed. So loss on sale of land disallowed because it is a capital loss. In working note you have to write down. Life insurance premium, it's a personal expenditure, not allowed. Life insurance premium. Pilgrimage expenses. This pilgrimage expenses is the personal expense of the owner. It will not be debited to profit and loss account, but it is debited, disallowed, add back. Pilgrimage expenses. Puja expenses in the shop. In India, puja is a routine activity conducted in the shop. So puja expenses in the shop is a recurring item. So it is allowed as deduction according to the rulings of income tax. So puja expenses are allowed. Security transaction tax, STT. See, security transaction tax will be applied whenever securities are bought and sold. Now we have to see interest on security. Credit side, you can see credit side by interest on securities. Securities are part of stock. When securities are part of stock, then interest on security is a business income. Remember this point, very important point I am discussing. Already I have discussed in detail in the introduction part. Again I am saying, if securities are part of stock, then interest on security is a business income. When interest on security is a business income, then security transaction tax will be allowed as deduction. If interest on security was not given or it is not a part of stock, in that case security transaction tax will not be allowed. If securities are not part of stock, then security transaction tax will not be allowed. If securities are part of stock, then security transaction tax will be allowed as deduction. Then interest on bank loan, allowed. It's a business expenditure. Profession tax, allowed. General insurance premium. Life insurance premium is not allowed. General insurance premium is allowed because it is a business insurance. Advertising, allowed. Guest house expenses, allowed. Law charges, allowed. Postage and telegram, allowed. Discount, allowed. Allowed. Household expenses, disallowed. Personal expense. So here household expenses 16,200. Next comes provision for warranty on goods sold. This is allowed. It's a normal procedure that warranty will be given by the business to the customers. So whenever warranty is given, there are chances that that businessman has to incur some expenditure on the warranty. So provision is made. So provision on warranty is allowed. Provision for bad debts, not allowed. Provision for bad debts, disallowed. Next, gifts and presents. We assume that gifts and presents are given by the business to the customers to promote the business. Normally, many business people, they will give the gift like New Year gift, etc. or festival gift to the customers. Why the gift is given? To promote the business. So gifts and presents allowed as deduction, assuming that it is to promote the business. Interest on capital, disallowed. Interest on capital, disallowed. Provision for depreciation, disallowed, because depreciation as per IT rules is given in the adjustment. So provision for depreciation, disallowed. Last one, provision for income tax, disallowed. Already in many problems I told you, provision for income tax. All the items on the debit side I have checked, and whichever item is disallowed, I have taken in inadmissible expenses. Now take the total of inadmissible expenses. Total comes to 1,09,900. Now add up. 3,04,510 plus 1,09,900, 4,14,410. From this we deduct incomes taxable separately. The credit side will see any income is there which is not a business income, we deduct. The credit side, gross profit, it's a business income. Interest on security, net. Tax deducted at source 1,050, 5,200 amount is the net amount. Securities are part of stock. Interest on security, if securities are part of stock, then interest on security is a business income. If that sentence part of stock is not given, then interest on security is taxable under income from other sources. Income from other sources. But here it is given interest on securities are part of stock. So interest on security is a business income. Nothing should be done. Interest is given net interest. 5,200 is the net interest, but we should not take net interest, we need gross interest. How much is the TDS made? 1050 is the TDS, tax deducted at source. After deducting TDS, net amount is 5200. Income Tax Act says you should not deduct TDS. Why you have deducted TDS? So TDS will be added back later on. Lastly, we will add back the TDS because they have taken net interest. Net interest should not be taken, gross interest should be taken. Rent from house property. Rent from house property is taxable under income from house property. It is not a business income. So deduct. Rent from house property, deduct. After deducting 3,91,450. Now deductions allowed as per IT rules. First deduction, bad debts. Just now I told you, when the SSC satisfies the condition, he will get bad debt deduction. ITO cannot object it. So bad debts will be allowed as deduction. Depreciation. As per IT rules, depreciation is given 31,500. Take the total of these two, 38,000. Now deduct 38,000. 3,91,450 minus 38,000, 3,53,450. Now deduct. After this, TDS, add. TDS on interest on security, just now I told you, interest on security should be taken at gross figure, but in the problem it is taken net figure. So whatever TDS is there, that will be added back to the profit. So TDS on interest on security 1050, add up 3,54,500. This is the income from business. This is the complete computation of income from business. Now in working note you have to explain. Already I have explained you in detail each and every point. But in examination you must write. Not only you should compute the income, but also you should write the working note on important points. First one, loss on sale of land is a capital loss. Just now I told. When an asset is sold and there is a loss, it's a capital loss. Not allowed as deduction. Pilgrimage expenses are disallowed, whereas puja expenses are allowed. Pilgrimage expense is a personal expense, not allowed. Puja expense is a business expenditure, allowed. Security transaction tax, STT, is allowed as deduction because interest on security is a business income. Because security is a part of stock. So STT will be allowed. If it is disallowed, we would have added back. But we have allowed it. It is allowed as deduction. So nothing should be done. Only note. Provision for warranty on goods is allowed as deduction. Gift and presents given to promote the business is allowed as deduction. So we have allowed it. Interest on security is a business income. Since securities are held as stock in trade, but gross interest should be taken. Since net interest is taken, so TDS is added back to profit. Just now I told you. When securities are part of stock, then interest on security is a business income. When interest on security is a business income, it should be taken at gross value, not net value. But in the problem in P&L account, it has taken net value. So whatever TDS is there, that will be added back to profit. That's why last item we have added. Next one is bad debts claimed by the SSC on satisfying the conditions will be allowed as deduction. The ITO cannot object it. Hence, bad debts are allowed as deduction. I told you, if the SSC satisfies all the conditions given by the Income Tax Act, then bad debts will be allowed. It is not at the discretion of the ITO that he may allow or he may not allow. No, conditions are there. So, bad debts are allowed as deduction. That's why here I have taken bad debt 6,500. Next, actual income tax paid should be ignored. In adjustment, it is given actual income tax paid. Not, just ignore it. Advertising expense paid on special advertising campaign is allowed as deduction. Income Tax Act says when advertising expenditure is incurred, revenue expenditure incurred on advertising allowed. Whether it is in the old market or new market, whether for the old product or new product, does not matter. Allowed. Cash purchase made through credit card is allowed as deduction. Just now I told you. Last adjustment it is given. Profession tax paid is allowed as deduction. Guest house expenses are allowed as deduction. So we have completed up to 6 problems. If you are satisfied with my lecture, give a like to the video. Share it in your group, in your friend circle. If you have not subscribed yet, please subscribe my channel and give your comments regarding these lectures. We'll continue the next problem in the next video.